All right, welcome to our podcast. We're back. What we're going to talk about today is what is actually happening in San Diego industrial right now. So I'm Chris Roth. I'm a partner of the Williams Roth group. We work at Lease and Associates. We got Rusty Williams. And what we're really going to get into today is if you're in the market to lease a building, we're going to talk about it from your perspective as a tenant. We're going to talk about it. If you own a building and you're looking to lease your building, what is your perspective? What should you be doing? If you're looking to sell a building, we're going to talk about that from ownership. If you're looking to buy a building and you're out there looking at industrial real estate, we're going to say what that market looks like. And from an investment perspective, we're going to say what's active, what's selling, what cap rates look like. And we're going to get into all that too.
We're just going to be honest, right, pal? We're not going to, no fluff, no nonsense, no broker bullshit type stuff.
It got to be a little political.
We're just going to lay it all out there.
Or should we just, I don't know. We'll kind of feel it out.
We'll figure it out.
All right, so let's talk about it from a tenant perspective. So let's get into some arguments on who's right and who's wrong here. So if I'm a tenant in the market and I'm trying to, I got a lease coming due in 6 to 18 months, what am I doing? What do you think?
Yeah, I mean, if you're a tenant in today's market, you're frankly in a pretty good position. And it depends on what product type you're in and what market you're in. So I'm going to be a little general and broad, but if you're in the North County market and you're anywhere from 10 to 30,000 square feet with pretty basic type office improvements and nothing super specific that you need, you've got a fair amount of options that you can go look at. You know, we're seeing right now that landlords are being relatively aggressive to try to keep tenants. You don't want to be a landlord that has one of 20, 25 spaces. If you already have a tenant in your building, you'd really like to keep them if you can.
Yeah, if I'm a tenant and I got a lease coming due, obviously we're real estate agents, but this is really what I would do. I would hire a real estate agent. I mean,
you have to.
Even if you want to renew, let's say you're 100% going to renew. The market has so much product out there that you're going to want to go at least explore what's out there, get your owner, your landlord to think that you're leaving, and they're going to want to keep you. We'll get into why that is, but you need to create a real scenario where you're walking out the building and the landlord's going, no, hold on, come back. So how would we do that?
But Chris, I'm a tenant. I've got a great relationship with my landlord. He's a really good person. I'm just going to go to him direct and we're going to work it out and it'll be great. Is that a good philosophy?
Well, that's great if you want to just get like a normal deal. You want to just get like hey, everyone's happy and we just all got a fair deal. I mean,
yeah.
And then you don't know what you don't know. Like that's the
exactly
thing.
Right.
You know, it's like, okay, well, let's go out there. And my building has a bunch of problems with the roof, has a bunch of problems with the carpet, paint. I want to move some walls. I mean, you got to negotiate all those things.
Well, and I think the thing that's important, to piggyback on that,
So I'll just exercise my option. Right here.
Well, what you allude to is that you don't know what you don't know. So a lot of tenants don't understand what landlords will provide. Rental concessions are a big one. You know, I can get free rent. You know, I can get tenant improvement dollars to fix up the space that I need. There's a lot of things outside of what's that base rent. You know, what's the rental rate. There's other concessions that are involved in pretty much every transaction. So if you're a tenant, you're unaware of what kind of free rent is being given on a 5-year lease. That's information you should know if you're going to renegotiate your deal with your current landlord.
So just to wrap it up from that perspective, if I'm a tenant, I'm hiring an agent. If I'm looking to move or not, I'm going to go look at all the options in the market. I'm going to act like I'm leaving. I'm going to negotiate on those buildings. And then I'm going to go back to my owner. I'm going to negotiate with the owner and have everything lined up for me to see what's my best option. And I'm going to create a real scenario where I'm leaving. And then if I want to renew, I'll know I got the best deal on the table.
But if I'm a tenant, why would I want to pay to hire a real estate broker?
Look, tenants think, okay, well, that's baked into my deal and I'm paying a little bit. That's the perspective. And I get it. I get why people think that. But the reality is that's the cost of doing business if you're a landlord. And they're going to pay it because they want to keep a tenant, especially in today's, which is what we should get into now.
Yeah.
So, all right, you're a landlord. Put your landlord hat on. What are we doing? Tenants leaving. Tenants lease expires in 12 months. What are we doing?
Yeah. Well, it's the same thing for a landlord. A landlord needs to thoroughly understand what options they're competing with in the market. So we have a lot of landlord clients, and when we get to the point where we're going to renew a tenant, we do a thorough analysis on here's all the buildings that could potentially work for this tenant to move to. Here's where we believe those landlords will do a deal. Here's how much free rent we think they'll give. Here's how much tenant improvements you can likely expect. And we want to really understand what we're competing with. And then landlord can make a decision on, what kind of a renewal proposal do I want to make to the existing tenant to try and keep that tenant. The other thing the landlord will do that we'll help with is analyze what is the cost for me to lose this tenant? Meaning, if the tenant does move, how long is it going to take me to rent this space? How much money am I going to have to spend to improve it? What kind of leasing commissions am I going to have to pay? All of those things in a financial spreadsheet show the landlord, use easy numbers and say, okay, over the course of 5 years, if I lose this tenant, I'm likely to generate $1 million in income. But if I keep this tenant, even by doing a lower rental rate, now I'm going to make $1.2 million. So renewing my tenant for a little bit less than what I'd like to ultimately will help me, preserve my cash flow. So landlords will look at it from that perspective.
Yeah. So, not to repeat things you just said, but we're talking about, especially in today's market, and it's really building dependent, but I would say the majority of buildings are going to have a lot of competition. So if that tenant leaves, that landlord is going to be put in a spot where the reality is they're probably going to have some downtime. So we would probably encourage them to do a renewal at all costs if they can, if they like the tenant. And like you said, it's going to save them money. It's going to save them time on market. They won't have to pay as high end commissions because commissions on an open market are more than if you do a renewal. And they probably will have to do less in tenant improvements than if they were to go to the market. Because whatever the tenant asks for is probably going to be less than what they're going to have to do. If the building goes vacant, they're going to make it look better. And then a new tenant might have really specific needs that will completely remodify the building, and they'll have to pay for that, or at least maybe amortize it in or do something. So it's going to be more expensive if the tenant leaves. And in today's market, they really want to renew. Now,
the other thing that we do with our landlords is we let them know if that tenant is in the market looking at other spaces, or does that tenant have offers out on other spaces? Kind of ties back to what we talked about earlier, right? Because if I'm the landlord and the landlord's broker, and I know that XYZ tenant has not toured any buildings, they haven't made any offers, they don't even have a broker that's out there helping them. Now I know as the landlord side, man, it's pretty unlikely that tenant's going to move since they haven't even looked at a space yet. Does that make sense?
Yeah, we can get it as a landlord. We can get pretty aggressive with it.
Right.
We're not as worried about them leaving. We know they're
right.
So, would you do a 2-year deal, a 5-year deal? Right now, what would you recommend?
Well, I think if you look at the overall market, and we did this earlier, where are we in the cycle and what's going on? I think we're in kind of a steady market, right? Kind of a normalized market. We don't have a flood of inventory. We don't have a small amount of supply. Kind of a normal market, in my opinion. I think the market's going to continue to get better, meaning rental rates will continue to climb. I think vacancy rates are going to come down, probably not drastically, but I think in a year or two, we'll be in a little more of a landlord-friendly market. I think that's my opinion. So if I'm a landlord, I probably don't want to lock in a really long rate at a low rent right now. I'd probably be okay with, we just did it on a building we own, Chris, so you feel the same way. We'll do a 2-year renewal, even a 1-year renewal, because I think the market is going to be better for landlords a year or two from now than it will be for tenants. If I'm a tenant, I probably want to lock in a longer term now.
Yeah, I agree. I think it should be a 2-3-year deal. If it's a decent enough rate, lock in the 5, and then you don't have to do a lot of work. But yeah, I'd probably do a shorter term than a longer term if I'm a landlord. If I'm a tenant and I can get a good rate, I'm going as long as I can, as long as I'm comfortable in the space. I don't want to get in the weeds on data too much, But vacancy during '09, when it was like top in the county, this is industrial county, was at 9.7%. During COVID, after that time when everything was getting sucked up by Amazon and everything else, it went all the way down to 1.9% for the county. And now we're back up to 6.9. So, we're kind of in this coming back up, and it feels like it's leveling off, like you said. So I feel like we've just kind of come back. It's kind of been a rough sledding for the last 2 years, and now we're kind of leveling off. So we'll see what the next year does, but I'm with you. I kind of feel like it's going to stable, maybe go down a little bit, and I think rates are going to kind of stabilize. Let's get into sales. So I'm looking to buy a building. How's that looking for me right now? Can I get some good deals?
You can get a good deal compared to where we were, right? Prices have come down. So, yes, you can find good deals. But it's not like there's a ton of inventory out there. If you look at buildings in North County, the 5 North County cities, Oceanside, Carlsbad, San Marcos, Vista, Escondido. Just take those 5 markets. You want to buy a building from 10 to 20,000 square feet, and you want it to have less than 25% office. Right now, there's 16 buildings that are available we could go look at. Now, 4 of them just are in escrow. We know that. So really, you have 12 buildings in those 5 markets. And, of the 12, you got to figure 3 or 4 of them probably work for what you really want and need. So there are options, but there's not a flood of them. And landlord and sellers know that, right? So they're not dropping their price drastically unless they really need to move the building. We're seeing a lot of buyers utilize the SBA loans, which can be great. We are seeing people do conventional, and in some cases, we just sold a couple buildings all cash. But there's not a ton of buildings, but there are options. So again, back to kind of a normalized market, I guess you would say.
Yeah, we get that question a lot, and it's funny because it feels like comparatively to what it was a few years ago, it feels slow. But the reality is, I think you're right. 2018, 2019, it was like 6 months to sell a building. It's not like a normal market where you have like 10 people going through. It's not a house where 100 people walk it and you sell it. So I think you're right. I think it's like right now, it takes 6 to 9 months to sell a building. Could go quicker if you find the right company to come along. But, I think if you're out there trying to buy something, there's not a lot of competition behind you. But the unfortunate thing is, the owner will eventually sell it, so they're not going to completely dump the building. So there's probably some room in the number. There isn't a ton of options, but there are options, right? And they probably
the stuff that's moving quicker is the quality stuff, right? The nice looking space, very functional, desirable markets, great locations. Those buildings tend to move a lot quicker.
Yeah,
but still they don't fly off the shelf.
So we kind of hit on it already, but if you're an owner of a building, you're trying to sell it. Are we feeling good about it? What are we telling them?
I think if you're like the client we just met with yesterday, it's got a great building, great market, did a phenomenal job fixing up the building. It'll be one of the better buildings on the market, and it will sell. We're going to be a little bit more aggressive than typical on pricing because of the quality. But I think if you price the real estate correctly for what you have, there's buyers out there and you'll get activity and interest. You just got to find the right group. But I think pricing, as always, is going to depict how quickly the building moves. If you completely overprice, it'll just sit and that'll be it.
I think you kind of mentioned something, functionality moves. And what we've seen, and this goes back to if you're leasing a building as well. If you have too much office post-COVID and you have too much second floor square footage, that building's struggling. So I think that's been a big change in the last few years, whereas it felt like everything was moving a couple years ago. Now, if you have far too much office component, it becomes significantly harder, and you almost have to completely discount that space in order for it to sell or lease.
Yeah.
So something to take into consideration for anyone that owns that type of real estate. But and then let's get to investors. Oh wait, before I move on, I also want to say, make the point that if we've had success in trying to lease a building, they only want to lease, the owner only wants to lease. Once we've transitioned to putting it out for sale, the building sells. Because the competition, even though there is some competition, is significantly less if you were to go sell a building. If you're leasing a building, it feels like there's just there's a ton that is in that same size range. They're not all directly comparable, but when you're selling your building, it's significantly less competition, typically. All right, an investor, what kind of product type is most active? What are people looking for the most?
Value add.
Yeah, that's easy.
I mean, everybody under the sun wants value add, right? Which makes sense. We want value add as well. It's desirable.
What's that mean? To people that don't know what value add is, what's that mean?
It's a property. It's where you buy a property at a price that is less than what it's probably really worth because it's got deferred maintenance. It's got leases in place with tenants that are either subpar or they have low lease rates. And what happens is you go in and you fix up the building, you re-tenant the building, you raise the lease rates, you improve the quality, and now you've created that value above what you bought the building for. There's a few different ways to.
What if I got a below market lease, 50 cents square foot, and I got 5 years on the deal? What's that look like? Is that a good thing?
It's not a good thing if you're a seller. It's a great thing if you're a buyer. Because basically you're going to value the building on what the income is. If the income is half of what it should be, you're going to buy the building theoretically for half of what it's worth if it were vacant or if it were leased at a market rent.
But
those buildings sell all day.
A lot of investors won't look at that. The ideal kind of scenario on a value add is like you got 1 to 3 years left where you can get to the upside faster. Because a lot of these guys want to flip out of it within the first few years.
That's the institutional guys, yeah. Those are the guys who have to burn through their money. They can't wait.
There's more of them.
Yeah, there's more of those guys. But there's plenty of people that will sit on a building with a low lease rate for 5 years.
True.
Assuming you buy it with a reasonable return.
So let's move a little quicker to wrap it up. And like, we want multi-tenant, single-tenant. What do you want? What kind of product?
Yeah, I mean, I think there's a high demand right now for multi-tenant industrial. A lot of people chasing it. A lot of people like it for good reason. It's a great product. There's a lot of different markets in San Diego that it thrives in. I think the single-tenant product is still desirable. You know, there are plenty of clients that we have that like single-tenant lease deals that will buy them, you know, with 5, 6, 8, 10 years on the lease and hold them forever. There's also guys that will buy deals that are short-term leases where they know they can re-tenant the building. But I think, like to your point earlier, they don't like the flex product, you know, unless it's certain markets and certain areas, maybe. But most investors right now are looking for low finish industrial, be it multi-tenant or single-tenant.
Yeah, and let's end it with cap rates. What do you think about cap rates? I got a market lease, 5 years, credits fine, not blowing crazy, but good, functional building. What are we selling for?
We're in escrow right now for a 5.5 cap. We don't really see it much lower than that. I think that's probably about market. It's good credit, it's good building, good location, 5-year lease, annual increases. You're 5.5 to 6%. You start coming into buildings with more challenges, lower inflated lease rates, some hair on the deal, you're into the 6s.
All right, so what we learned today is if you're a tenant, I think you go out and hire an agent. We'd love to hear from you, but obviously, no matter where you are, go hire an agent. Look at renewal options or relocation options. If you're a landlord, you know, hopefully you're obviously talking to someone already. But again, you should go to an agent, talk to them, see what the market dictates in the event your tenant leaves. And probably get involved with someone and have them help you on the negotiation or on a renewal. Selling is easier right now. There's less competition. There's just not a lot of buyers in the market, but you will eventually sell it. And in investments, we're looking at 5.5 to 6 cap. Multi-tenant industrial, low finish is what we're looking for. So next episode, we're going to keep dropping these more consistently now. So hopefully you keep in touch. Hopefully you watch them, subscribe so you don't miss them. Thanks for joining us. We'll see you next time.